Good evening, good peoples. It is Bruce with Targeted Wealth Creation with you for Roundhill Weekly Payers and then the two crypto, ETH and Ybtc. All right, let's jump in here. Going through the S&P 500, the NASDAQ, the Russell 2000 on these index funds. We had a pay of almost 25 cents, yielding 29.10. Here's a couple similar ones. Whoop, there's also a 29.77 June 4th. There's a 27 on 3/12. So you can see these varied. It looks like this 44 is kind of the big payer back in April. All right, guys, so much for XDTE. All of the funds were up slightly except for the Russell 2000, and that was down just 0.10. All right, let's move on through. So in summary, this is in my summary, so to speak, but it's always a good indicator. So through all these payments, right, a year and 3 months, you're up $16.83 on the Roundhill S&P 500 fund, and the NAV has gone down minus 7.86. So that means you've netted almost $9, $8.97. So not bad. All right. On the Qs, we had almost 23 cents, 22.8. Higher yield. The reason that's a higher yield is because this is a cheaper fund. The QDTE is in the 30s, the XDT is in the 40s. It also was up slightly. All right, moving right along. Oh, let's see when a similar yield. So 33, there's a 31, 32, 35, 34. There's a 33, 34. Back when the fund was similarly priced back on March 26th. So obviously these indexes have risen, guys. We're up near new highs. I found it kind of interesting. I think the Dow and the Russell were up on Tuesday, but the NASDAQ not so much. And maybe the SPY, I really don't remember. I just caught a news report and read it kind of quickly. All right, let's go to the Russell. Oh, let's look on the bottom. So you can see this one isn't holding up quite as well. It's paying more in the total, but the NAV decline is also greater. So your net is a little less. So it'll be interesting when we look at the final stat. So remember, this fund doesn't have the same life period. It's getting there. It's approaching its year when we get to September. The other funds are already past a year. They're like 15 months, and this is like 9 months going on 10 months. So it's only 2 months away later into July. All right, this is my point. So it dropped 0.10. Not a big movement, but interesting that now I'm using, I believe, 6:30 dates, and now 7/1 pricing is out, right? Tuesday's already happened and closed, but I tend to report it on the day before the declaration close, right? So you had a 6:30 close. They came out and announced these, then they traded through the day. So it's a subtlety. 26 cents, essentially, 258902, almost a 40% yield. We had a 40 last month at 37. That's low. We had a 46, a 41. There's another 40. There's a 39. We were lower priced at 30.95. We're at 34.22, so it takes more money. They got almost a 40%er. See, this is a 40%er, and it only had to pay 24.6. We're paying 25.8. Again, higher price fund, right? But both of these funds are much cheaper. They're in the 30s versus the 40s for the XDTE. All right. So looking at this, this doesn't look as well, right? We all know the Russell hasn't held up. Well, is there sector rotation going forward? If the Nasdaq and the SPY sell off, does Russell stay stronger? Again, we'll have to see. Um, but not a good win situation. And I've said this a couple times. I remember when this fund was 3 months old. I mean, it was out yielding, it was out nav gaining. It just looked like a dynamo. If you look the 3 months projected out a year, you'd be like, oh my gosh. Well, things don't always go as they appear. So XPay is, the 12% targeted fund. I haven't always updated this, so I came in and updated. It has a different pay schedule. It'll pay later. It's a monthly. Not a bad fund if you're just, you kind of want consistent payment. But it is interesting. They sort of figure it out ahead of time. And then obviously, if the fund goes down, you're going to have NAV erosion. So I think the current is in the 54s. I use 630 close here. So I think it's in the 54s now, but you can see where it started in the 57. So you have to take that into account. It's yielding this target 20%. Okay, not 12 as if I said that, but you've got some NAV erosion. They can't guarantee that part. They can say they're going to pay you a certain amount. All right, so let's look at the summary. Again, you can ignore the X date here. I'm doing it really over on the other, or XPay, sorry. So here's the three funds with their launch dates, with their inception prices, right? So we're 393 days, right? We're a couple of months past the year, but over here, we're still moving toward the year. So what do I do here? I pretend you invested 1,000. I'm always using the inception price here, whereas your price may be well lower because all the funds are lower now. Look at the current price. So we're 44, we're in the mid 30s. These were in the 40s, this was in the 50s. So as we carry across, look at the distribution. These guys are the exact same period. So you can see the NASDAQ fund, which is cheaper, is paying more. Look at the divvy return. 42 versus 32. This is annualized, right? This is just grabbing 365 days worth, not the full 393. And this is projecting up from 295 to 365. So these two shrink. This one goes up. So your annualized dividend is XDTE is paying about 10% less. You're getting almost 40% annualized yield. Well, that's a real annualized yield. This one's paying you 30, but you do have NAV erosion on the indexes, right? So the winner, and pretty easily here now, is the NASDAQ fund, at least over the 365 annualized days. Okay. So you're looking at a 20%, and most of that happened. Not only did they beat them here, well, I take it back. They beat them here by 10 points. So they're yielding essentially 10% higher yield. Their NAV eroding 5%. So that gives them pretty much it's 4.3, but let's call it 5. When these are within a percent, I say go with who's giving you more money or whatever. So at one point, XDTE, in my opinion, looked like the better fund. And what you guys should be doing, and I may incorporate it, is years worth of data is one thing. What's happened? Like, let's say we have a massive sector shift, and for 45 days, the money is flowing into small cap and the Russell's just going nuts. Well, you don't see it here in their statistics over 295 days. So that's why a lot of the stuff I'll do, I'll show a 1 month gain, especially in my minors and stuff where there's not really yield. I want to see what's it done for 30 days, what's it done for 90 days, what's it done for 6 months, and what's it done for a year. When I can find a stock that's up in every one of those categories, I know I got a winner. Usually it's a producer, right? whereas these little explorers and things like that. So, you, you know, these are big indexes regardless, but there's definitely sector rotation that happens over periods of time. You know, the Dow, which we're not doing anything on, tends to draw first and foremost institutional money. A lot of the big European countries, the higher GDP countries, Japan, South Korea, when they buy into American stock market, they will go after the large, especially big institution money. They'll buy large cap Dow names. And nowadays they can buy a Mag 7 at NASDAQ, sometimes New York Stock Exchange, but they're buying the large cap stocks. And it used to be that the Dow contained all those. That's also shifting, but the Dow still has some significantly large companies in there. All right, guys. So that's what I got. Let's go to Yeth and Ybtc. So Yeth, as you guys probably picked up on, has now converted. Look at this. Look how long it waited for this payment from 527 to 71. It is now officially, Roundhill used to say monthly ETF, Roundhill now weekly ETF. All right. So we got a Yeth that's going out there and taking care of business. Now, these are updated here. Don't worry about that where I compare it. Um, Actually, I didn't compare it, so I do need to update these. On Ybtc, I show it against BITO, you know, BTCI, against the index itself, sort of IBIT. Um, so I need to probably incorporate that and do the same thing for ETH here, guys. Um, so I will do that. I just noticed. All right. So that's their payment. They will now start paying weekly. So we'll look for something on 7, 8, and so forth. All right. Let's look at YBTC. This is what I was referring to. So they started out monthly down here where they were in the white, and then they converted to weekly for the popularity. I mean, it's Roundhill. What does everybody think of Roundhill? They think weekly, right? They sort of pioneered this and they're kicking butt in the weekly area. And now most everybody is coming after that space because, you know, in all honesty, it's like kind of asking your employer, you know, hey, you pay me monthly. Can you pay me bi-monthly? And you know what? Can you pay me weekly? And if people now want to get paid daily, right? That's the point. I don't really care. And also, for me personally, because my cost of living is relatively low in Asia, so I have way more money than I need to spend in a month. Um, but that's a choice that I made and was able to do that. I know many of you, if you have grandkids or you're older or you're younger, you're still in a first world country workforce. And I get it, guys. Uh, but if you're older and you're retired, well, I'm never retired. I always doing something. If it's not YouTube, it was, you know, teaching math. There's just a lot of things that I gravitate to, you know. You sort of, if your body and your mind die, you're dead. So you really have to stay active. It's the only way to keep going. All right. So on these, let's take a look. So up at the top is YBTC updated. And then the only one that, and you know, I always say fairness, like BITO just, I own some BITO. So they just declared like 2 days ago. So they paid 77 cents. So when I go out here, they're the first one in the next month to be updated, right? So I took it, I put it in here because I know it, right? These other guys will, especially the weeklies, will. Well, no, that's Ybit. Sorry, YBTC. Did I add to theirs? Yeah, I did. Okay, because they're pulling from my big sheet here. So let's get dividends. Yeah, E53. Of course they're updated. Yeah, they're right down here. Okay. So otherwise, I have to wait for Ybit because it's a monthly payer. Ybit doesn't pay, and then I believe BTCI is probably a weekly payer. I did look, and there was no update. So we have closeness. We got 4370 in total return. Ybit, that speaks for itself. The NAV erosion, right? It doesn't even win in the dividend space. Um, Bitto kind of wins in that. Well, you have to go annualized, but it still wins. So Bitto, Ybit, and Ybtc are all up there. In net, the index, I call it the index. It's really it's either Vanguard or ProShares or, you know, BlackRock. It's one of the real big guys is fun. I don't remember which one right now. Um, but it's a nice index, right? It's what people write their options on when they want to be close to BTC. So the classic underlying, it's hard to beat the underlying, and they don't in these scenarios. But Bitto kind of stands out, and YBTC and BTCI are right there with Ybit really. Now, what I should do in this one, I have some big times in here. I really need to move this back and go back about 6 months and let everybody just work up off the last 6 months. So I've reached that point where these are just too long a dates. Okay, guys, that's what I got for you on the Roundhill funds and some comparison. All right, this is Bruce with Targeted Wealth Creation. That I am not a financial advisor. This is not financial advice. Have a great rest of your week. Bye for now.